Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Liberty Gold. Liberty Gold is traded on the TSX under the ticker LGD and on the OTCQX under the ticker LGDTF. And I'm joined today with the president and CEO of Liberty Gold, Jon Gilligan. And Jon, it's great to get you back on the show. Even though we have chatted at some different mining conferences over the year, it's been a year since we've had you on the KE Report. It was November of last year, so a lot has happened for the company over the year, a lot of news, and I thought it was high time we bring our listeners up to date on what's going on with Liberty Gold. Maybe just as a general comment, Jon, just remind us, you put out a PFS on your Black Pine project in Idaho last year, and it gives people a nice summary of the value proposition at the project as I think a key and critical development project in the U.S. So maybe just remind us some of the key metrics around Black Pine and why this is a project of merit.
Yeah, thanks very much, Shad. It's delighted to be back on the KE report. You're absolutely right. It's been, a year's flown by quickly. I mean, back then we were struggling to figure out, what base case price would we use for the PFS, and we settled on 2,000, as many of your readers will know. And we went through the ringer. And of course, today, $4,000 gold a year later it's difficult to wrap your head around that. But at a very high level, the PFS on Black Pine articulates a very, very attractive run-of-mine, open-pit, heap leach oxide gold operation located in southern Idaho. The gold production rate in the first 5 years is 183,000 ounces a year. Life of mine, 135. 17-year mine life for just over 2 million ounces of gold produced. The total capital the initial capital to build it is just over 327. And the cost base, so the operating cost per ton, is just over $9 a ton, all in cash operating costs, for an all-in sustaining cost life of mine of under $1,400. At that $2,000 gold, we have a just over $550 million NPV and a 32% IRR for just over a 3-year payback. And to give your readers a sense of how does that change today, at $4,000 gold, we've got an NPV that's touching between 2 and 3 billion. We have an IRR that would be triple digits and a payback around about a year. So significant upside leverage from a valuation perspective as you see the increase in the gold price. That's a characteristic of these types of deposits, where you have these lower grade, very broadly distributed gold mineralization in this massive rock package. As the price goes up, it really exposes material that at a lower price would be waste, becomes ore. And instead of costing you $2.80 or $3 a ton to move it to a waste pile, you actually gain revenue from leaching it. And so that's the source of this huge torque, which they say, and sort of torque to gold price, which means upside opportunity to value.
Yeah, I think it's such a fantastic point. What a beautiful thing to go from a $2,000 gold assumption to looking at it through the lens of where things are at now at 4,000 gold and what kind of leverage the project has. And I think it's also worth pointing out that in addition to being able to bring in what would be previously waste, but now turning into revenue producing ore in a development scenario, you're still growing the resources here. I mean, you've got almost 5 million ounces of gold in all categories, and you're not done expanding the project yet. You've continued to drill this year. It seems like a lot of the focus was at the Rangefront pit, but you've got multiple pits here that tie together into this resource. Talk about the expansion potential that still exists in addition to the metals price expansion.
Yeah, thank you, Shad. So we were really pleased at the drill results coming out of Rangefront this year. The original objective of the program was to do some infill drilling inside the pre-feasibility resource to upgrade some inferred material to indicated, so that would go into the reserve at feasibility. But as we were drilling the sort of the margins of the pits, we knew there was high grade kind of poking into the pit walls. As we started drilling that, we started to see the mineralization materially extending beyond the current sort of constraining pit, if you like, of the resource. When we first discovered Rangefront and we published that, I think, in October 21, we saw it as a 1 million ounce resource. As your readers will perhaps have seen from the couple of press releases we came out with in the last few months, we can see this materially growing, and we now think of it as a 3 million ounce resource. And not only that, because it's the material that we found on the western margin is closer to the surface and good grade, we see a real opportunity to start the initial mining on Rangefront. So that will be down the hill, right beside the leach pad or the new leach pad, as opposed to the pre-feasibility study, which had us mining at the top of the hill in the Discovery pit. Discovery pit's got some great grades and it's really nicely mineralized. And, when we did the studies, it wanted to go and mine there because we had this kind of waste layer sitting on top of Rangefront. That waste layer is now very nicely converting itself to ore, not only with increased drilling, but also with the impact of the metal price, laying us open for the possibility of mining there first. That would be a simpler initial mine. It would be cheaper because it's much closer to the heap, and therefore you need fewer trucks, a smaller investment to get the mine up and running. And the metallurgy, the metal recovery from Rangefront is significantly better than the metal recovery from Discovery and elsewhere. It's all good. Rangefront's great because we don't have any of the occasional distribution of clays that we see sometimes in the other pits. Rangefront is the cleanest ore we have. So we have a situation where we have clean ore close to the heap. It's physically down the hill. So from a point of view of operations, it's an easier, quicker build to get in and mine there. And I think we're going to see a material improvement in the whole operating plan at feasibility, which is we're working on now, that study, and we're due to publish that in October next year. So very exciting times within known resources. And then outside that, we have a number of targets that sort of in the next onion ring around the core that we've drilled out, that is the current resource. That's permitted, ready to go. And then we have another onion ring around that of another 30 square kilometers on our property that's not yet even permitted for exploration. So we're going to see sort of multiple years of ongoing exploration and discovery at this asset. And it's going to be the sort of mine where you have, as part of the mine operations, a resource drilling budget. And that drilling drills out around known resources, drills new resources, and you'll see, I think, incremental growth in resources replacing metal production, replacing reserve depletion from production over the life of mine. And that's how these things kind of keep going. They develop almost a life of their own. The Marigold mine is a great example. Started in 1989 with a 9-year mine life, has produced every year since, and today has a 9-year mine life. Black pine is going to be of that genre of deposits.
Well, John, I think that's such a solid point that usually the market only gives you credit for, the 9 to 10 year mine life that most people put out there. But the reality is, once you get out there and start producing and plow some of those revenues back into exploration, those multiple onion rings you just described are going to replace the reserves and possibly keep extending out the mine life far longer than what you see in the study. And the point of these economic studies are they're a snapshot in time. They often change. So as you point out, Rangefront now jumping up in the queue as possibly the early part of the mine development plan. That'll be showing up in the feasibility study. A lot of questions about what steps have to happen between the feasibility study and a construction decision. Maybe weave that into the mix as far as after we get the feasibility study, what other catalysts have to happen, and maybe discuss permitting along with that.
Yeah, sure, Shad. So from the technical point of view, once feasibility is done, that will be what you could call a bankable feasibility study. So that study we will use that to go and raise project finance to build it. So there's the whole financing piece of how do we raise. We need around about 400 million to build this. That's something like 350 initial capital, which will be up slightly on the pre-feasibility. And then we need some working capital. So sort of a notional today, a notional 400 number. We finance that. Parallel with the financing, the technical piece goes through what's called basic engineering. So you take your engineering from the feasibility study and you kind of flesh it out, so to speak, all at the same level of basic understanding of the engineering, and then you go into detailed engineering. And what detailed engineering does is the end of that are drawings, engineering drawings ready to construct. So that's the final design. And we anticipate going through 27 while we're waiting for our permits to go through all the way through basic and a fair way through detailed engineering, so that when we come to make a construction decision late 27, we're very well advanced in understanding all of the engineering detail that we need to have a very reliable capital cost estimate and a very clear understanding of the construction schedule. This is a simple project, but the more you can get that engineering done, the better it is. So that engineering gets us to the end of 27 for construction. The parallel path in permitting, we started that about a year and a half ago, actually a bit more than just maybe 2 years ago, when we submitted a conceptual plan to the federal agencies of what we wanted to do. And we worked through that, and we ended up with memoranda of understanding between the federal agencies, two agencies working with us, the forest and the BLM, and the state agencies. We agreed the cost recovery process where the proponent, that's us, reimburses the government for the process. That's fairly standard these days. And most importantly, we agreed a schedule. We submitted in the beginning of January this year what's called the draft mine plan of operations. Think of that as the pre-feasibility engineering study, which describes the mine and the production and the facilities and the infrastructure, but it's reformatted in a way that the government want to be able to assess and ultimately approve. So we submitted that. We've been in a sort of a completeness review of that document. We're about to submit what we hope to be the final version of that. That allows us, once deemed complete, to get the notice of intent, which is a registration on the Federal Registry in Washington. And at that point, the 24-month official clock starts the formal permitting process. On the assumption that we get the notice of intent by the end of this year, 24 months, that takes us to the end of 27, when we've completed the detail engineering, or most of it. At that point, we get our draft decision notice, it's called, so a draft record of decision, which we're anticipating would be positive. And at that point, we're able to make a go decision on construction, with the target that construction would start sort of late Q1, early Q2 2028. So there are two parallel streams here, the engineering stream and the permitting stream. They both come together in that construction decision late 27.
Fantastic. I really appreciate you lining that out. And it sounds like by the end of 27, all of those factors are coalescing, and then you hit the ground running with the construction in 2028. So that gives people kind of a timeline of the technical side, the engineering side, the permitting side, and also in the background, still working on building the capital stack and the financing. Maybe more in the here and now as far as the financial side of the company. I think it's worth highlighting, John, that you had a key strategic stakeholder come in with Centerra in September. It was announced on the 8th and closed on the 30th. And then the company also did a smaller capital raise in October earlier in the month. So maybe just walk us through the financial health of the company, having brought in a key strategic mid-tier senior producing company, but also raising some money in the till to keep the operations going.
Yeah. Look, perhaps just for clarity, we did a raise in April this year with Canaccord. We raised 23 million with shareholders, and we were pleased not only to have existing shareholders participate in that, but we also had shareholders that had been in the stock and had sort of moved away, come back. And then we had some new institutions coming in, and we were very pleased to see that. That raise, we knew at the time, wasn't going to get us all the way through to the schedule I just described through the end of 27. We had identified that a strategic partner, a 9.9% strategic or corporate in, was really the next logical and best way forward to put money into Treasury. We had been, in quite a process with a few companies. But at the end of the day, Centerra came through with an excellent deal. We got a 10% premium to the share price to a 5-day VWAP, which had them coming into the stock at 56 cents Canadian. So that put, for a 9.9% stake, that put 20 million US into Treasury, which was very nice on top of the 23 Canadian that was raised in April. And then the small amount, or the relatively small amount that came in, the 2.2 that came in early October, that was the second tranche of the payment out of Turkey for the sale of our TV tower project to CVK. And then the fourth piece, if you like, is we have, from the raise in April and from a raise in 24, we have some warrants out there at a 45-cent Canadian strike price. And we've seen some of those warrants be exercised with the run-up in our share price. We have one set of warrants expire in April next year and another set in April 27. And that brings in something in the order of 18 million US over those 2 years for the warrants. With all of those sources together, we are fully funded to get through to the end of 27 for a construction decision. So what does that mean in practice? We don't have to come back to shareholders for more equity to take us through this critical development piece where we're doing the engineering, we're doing the resource drilling, we move into that basic detail engineering, run all of the permitting process that we need to bring those two together to that construction decision. So fully funded to a construction decision at the moment.
Well, John, I think that's going to be music to people's ears because investors don't like being surprised with over and over again getting diluted down. And in this case, you've done several very wise transactions back to back with the capital raises that you did do, with the sale of TV, with also bringing in Centerra Gold as a strategic. And so fully funded through the construction decision, definitely a good place to be as a company because now it's all about catalyst. And maybe one other point to mention is you've really graduated from an advanced exploration company into a full-blown development company here. So it's that second leg of the Lassonde curve, if people listening are familiar with that, where you see the first big leg in discovery and the second big leg in the development into first pour. And so as a result, you're staffing up. You're building the team to build this mine. A lot of people are waiting to get taken over. Your attitude as a company is, let's go ahead and make this project work. Talk about the enhancements to the team, building up the bench strength.
Yeah, so I joined this company as COO 4 years ago, and I joined it with the intention of building this because I had worked at the Marigold mine in just outside Winnemucca, owned by SSR Mining. I'd worked at that mine when I worked with SSR, and I identified very quickly when I saw Black Pine that it is a fantastic analog for Marigold. And so I kind of made the decision for myself personally. I really wanted to build this, and I've been on a bit of an internal crusade over the last 4 years to convince the company, convince the board that this is a company maker. This is a foundational asset. We are in many ways a bit of a unicorn. If you look around other assets in the Great Basin, there's nothing that is a near surface, low cost producer with a 5+ million ounce resource with a modest capital entry And the initial capital costs are such that it's within reach for a company like us, from a sort of financing point of view, to get this done. And so when I took over as CEO in June and Cal Everett retired and came off the board, we needed to do that credibly. We needed that skill set on the board. And so we brought on Lauren Roberts, who is a senior executive with deep operating experience, having worked in both Heckler and Kinross. And Lauren came on the board in September, and he did so with the express intention of being involved in a build. So delighted to welcome him to the board. And at the same time, again, as soon as I took the seat, I knew we needed to create a credible, solid, competent technical owners team. So we brought on 3 new hires, a VP projects, a guy called Tyler Cole, who's worked on both sides of both the engineering consulting groups and also the owners as a construction projects manager and director of projects at Leach Operations. We brought on a very well-experienced metallurgist, Richard Zagel, who was ex-chief met and ex-process manager at Marigold. So very, very relevant experience. And we brought on Owen Nickel, who used to work for Evolution. He's a resource and short-term resource modeling grade control specialist. He's come on to drive all of the geology and all of those models that really are the front end of a production mine. And we also brought on another resource, Charlie Mumford, to support the permitting team. So we've got a 4-person permitting team and a 4-person technical team. That is a solid in-house owners team with the capacity and the capability to deliver on the permit side and also on the technical side. So if you sort of think about our last kind of few minutes conversation, we've got the team, we've got the asset, and now we've got the internal funding to get this done. So we have a very clear view. We are disciplined in the delivery that we're promising of taking this through the development process, the permitting process, to a construction decision in late 27. And I think, we're starting to tell this message, and we're starting to, I think, get some traction in the market around our capability and capacity to get this done. And I'm delighted to be able to share that with you today.
Well, John, I think that's a great place to wrap it up because, as you said, in the course of this conversation, we've discussed the project merits. We've discussed how it's continuing to grow through the drill bit, how even earlier parts of the mine sequencing are changing now with higher grade areas and easier areas and closer to the heap leach pads coming up with range front. But you also have the engineering studies, the technical studies, the financing coming together, and the team coming together that can build this project. And we've given the timeline here where a lot of these catalysts coalesce really in about 2 years' time. And that's an exciting stage to be involved with a development stage company. So definitely a lot of catalyst on tap for Liberty Gold. There's definitely going to be a lot of news flow. So for those of you listening in, click on the link down in the show notes. It takes you right over to the Liberty Gold website, straight to their news section where you can sign up for updates that hit your email inbox or just follow along with the news catalyst as they drop. Keep us posted. We'll get you back on for an update sometime soon, John. Hopefully a lot sooner than 1 year this next time. And looking forward to our next conversation.
Thanks very much, Chad. Delighted to be on KE Report. Really like the questions. And there's a lot going on. Let's do 6 months. I think we'll have a lot to talk about.